Hello, welcome to another session of our weekly Bitcoin mining conversation with the founder and owner of LiquidHash, Nick Campisi. This week, we're going to cover some of the big stories currently happening around Bitcoin mining and some other really important information for you. So let's dive in. Thanks for joining us again, Nick.
Hey, good to be here once again.
Yep, so we'll jump right in. First of all, I heard of a Texas senator recently saying that, quote, Bitcoin mining is a net plus for the environment. What does that mean? And is mining Bitcoin really green?
It really is. I mean, everyone looks at Bitcoin, as this form of money because it's revolutionized transfer of value. But, when you really dig deeper, it can be the transfer of energy as well. It is an excellent store of energy when, for example, I think what this senator is really looking at, is, look, we've got gas that is otherwise being flared or excess power that can be consumed on the grid at certain times of the day. And Bitcoin can help balance that to where either one, in the scenario of the excess power, you have now the amount of power you need during peak times, or instead of venting that gas, it's being used for something of value. And so, there's this argument that, in really, we feel that Bitcoin, as a contention of miners, is actually going to be carbon negative, in that, we can take sources of stranded gas, things that are like in landfills, and instead of that letting methane go off into the air, we run it through these tier 4 generators that have 80 times less emissions than just letting that go into the atmosphere. And so, the senator's dead on.
It's very interesting. So it's basically an option to not waste energy that would have been elsewise wasted. That's very interesting.
Yeah,
So,
look, this is this is going to revolutionize the entire consumption and production of energy in the world. Okay.
what's the benefit of mining with excess energy sources, such as electricity generated from a hydro dam that generates too much power, like we just talked about, compared to intermittent Bitcoin mining, as it's being called, meaning using renewable energy sources that are on an unpredictable schedule, like solar panels and turbines?
Yeah, so okay, let's use the example of the plant that's sitting at the hydro station there that's generating power. If it's got a consistent flow of water, maybe seasonally there's a little bit of an adjustment, but let's just say, for easy terms of your question here, it's pretty consistent. In this case, if that amount is unable to be consumed, then maybe they produce 100 megawatts of power and the market dictates they need 80. So with the other 20, there's this course of saying, hey, perhaps what we would do is, take those 20, use them, and then if the community needs the other 20, we can just turn the Bitcoin miners off at a moment's notice. And, I was involved in a project a few years ago that it was exactly that. Is that, in the course of a year, 365 days, there could be, 3 to 6 days out of the year that we weren't mining Bitcoin, where we were simply at that day power down and that excess capacity would go on to the grid. And so that's known as a load balance, is that it allows, the community to take the power when they need it, but when they don't have it, now there's a way to subsidize the cost of the power that's normally being put out there by using Bitcoin mining as the buyer first and last resort. Now, to go to your intermittent source like a wind or solar, when the wind's blowing, the power costs, the best example of these two, really, you go out to West Texas. In the West Texas market, there are times where, you could have a lot of wind power is being produced, or the sun's shining and there's excess solar that's being produced on the grid, that the power cost actually goes negative, where you are being paid to take power at that time. So there are some enterprising companies that have gone out and taken, which we kind of almost, refer to as a brick, which is like a miner that is not profitable under even like 1 cent power. But if it's negative or free, the power, then maybe you can make some money. And then, so what they can do is go up and set up a facility that is simply going to take that power when it's profitable, and when it's not, power down. And so what they're doing is helping grid resiliency there by being able to take the excess when there's too much and then power down when it's in balance. And if you have too much, this is a problem. You gotta have somewhere to go with it. If you got too much going in, you can have these overloads, and it can cause catastrophic failure to the grid.
Wow. So mining Bitcoin really does make the process of creating and consuming energy more efficient. There's less wasted. It's more cost effective. That's pretty impressive. So since mining Bitcoin with these excess energy sources can happen at any time compared to, on and off, but compared to intermittent Bitcoin mining, which is very unpredictable, does that mean you don't really need to watch the Bitcoin markets, or do you still have a hand in the markets?
You got to look at it to an extent, in that when you're at the time we're at now, we're in thin margins. Can they get thinner? Absolutely. So there's a natural balance in the Bitcoin network that, if you're operating on, say mid-tier power prices with late gen equipment, then you're typically always going to be okay. If you have, say, older equipment but really cheap power, there's going to be a time where eventually, you're the next to kind of get cut down. And so, and when I say cut down, I mean, that you're going to go unprofitable. And so there's all these things you got to kind of look at. And, from our side of it, we view this in a couple different ways. Yes, we self-mine, and we've got projects that we're part of, stuff we're invested in. But, we're always also looking at just the simple power generation side, is that, if you've got this source of power and it's at, let's say, 2 cents a kilowatt hour is the cost of production, we may come out and say, look, the market price is 6 cents. And so we have this spread of 4 cents a kilowatt hour, which, if you spread this out per megawatt hour of power, on a monthly basis, you're talking at, $29,000, $30,000 a month, and if you've got 10 megawatts, you're talking almost $300,000 a month. And so that's just the spread on power versus production and market going rate. And what's been happening in the market in the last year here is power prices are going up. Where you used to be able to get what was considered wholesale industrial power for a 5 cent per kilowatt hour rate, it's really not happening anymore. Now, that type of all in, hosted rate to drop your miner, you're talking 7, 8 cents. So, there's still possibilities to go out and be able to produce that power for this sub 5 cent. And make the spread on that. And so, we focused a lot on these energy arbitrages, and if someone is interested in that, can, simple finance economics, then I'd tell them to get in touch, because that right there, I think, is a no-brainer in the market right now. Even if you don't want to have any exposure to Bitcoin, that is one of the biggest opportunities I see in the entire world right now, is arbitrage and energy.
It's very interesting. So in this situation where energy is way more expensive than before, and the price of Bitcoin has dropped significantly, it's a dip at least. Is it smarter to start mining Bitcoin or to just buy Bitcoin and hold, and why?
So this is where you get into what's called high time preference, low time preference. You know, there are times where buying Bitcoin is going to make sense. And those times typically would be when you're going to not be able to execute mining very quickly. Right now, though, miner prices are a third of what they were just at the beginning of this year. And granted, you know, look, we can look at the price of Bitcoin, it's about the same, okay? However, miners are priced off the future value of Bitcoin that they're going to produce. So if you look at the history of ASIC miners, and we go back several years and back test the results, you are almost always better mining. You could snapshot a couple times where, you know, if you hit it just dead on right and you know, cut your analysis at a certain point, that you could probably paint the tape to make it look like Bitcoin was a better buy. But what people don't really realize is that you got to look at the salvage value of that miner. You know, an example was that just a few years ago, we bought some miners. I believe we paid, I don't know, a couple $1,000s a unit. And we made our money back on those miners really fast. You know, these miners were paid for in a matter of months, not years. You know, a few months, got our money back off of them. And they continue to hash to this day. But there was a time where not only would we have probably made all of our money back in terms of Bitcoin, but we also could have sold those machines for, you know, $12,000, $15,000 each. So if the price of Bitcoin goes up, the miner's going to go up. If the price of Bitcoin falls, the miner's going to fall to an extent. At some point, they start producing a cash flow, and that's what you're valuing them off of. So, I mean, yes, I mean, they're going to kind of go in lockstep, but it's not linear, you know? And so there is a you know, a lot of numbers that we use that are internal to kind of tell us, hey, now is the time really to buy. And look, you know, not financial advice, but it's not looking so bad right now. You know, if you've got capital and, you know, ability to execute like we do, then I think that there is an excellent opportunity right now that people are going to look back on and say, wow, that was the time. And it's always, you know, it's the same thing in stocks and in real estate, oil and gas. You make your money on the buy. And when you make your money on the buy, it's because it just doesn't look that great outside. And look at the stock market yesterday. You know, look at real estate right now. Everyone's got a reason why not to do a deal right now, whatever. I mean, and I think that there's some unbelievable deals in oil and gas stocks and real estate, not just Bitcoin, but especially really there's just some crazy deals in the Bitcoin mining space right now that I think are going to get looked back on as, you know, 4 or 5 years from now, people are going to say, wow, how'd you see that? And it's just right in front of your face. And the reason I can say that is, you know, I've been in a Bitcoin space now for almost a decade. And about 5 years ago, when I really started, you know, seriously looking at mining and getting involved in the space, this is how it looked, exactly the same way. And it took that leap of faith to go forward, to put some capital in, and to get moving, and then to press it when it really made sense. And if you go back and look at anyone that's in any other industry, they typically will tell you similar types of stories that you know they made investments at the right time, and even if you make them at the wrong time in mining, you'll get your money back. You know, will you get the 500, the 1,000 10x return in a couple years. No, if you buy it at the top, but if you run that machine, you'll get your money back, and that's ultimately, the beauty of the Bitcoin network. It is very self-regulating, and you do want to make good decisions. A lot of public companies I see in the mining space, they took on a lot of leverage last year, and I think they're starting to pay for that. The ones that didn't, they're going to emerge and they're going to do really well in the coming years.
Yeah, I always hear about people saying, man, I wish I bought Apple way back in the day. I wish I bought Google, but I always tell them that there's opportunities today that you're going to say the same thing for in 20 years. Man, I wish I bought Bitcoin on August 23rd, 2022.
Yeah,
So
exactly. I mean, look, I think, people are going to laugh one day and you tell them you got a coin for $21,000 price of the day. And, because I see it being 100 times more valuable. And that's a very realistic number. We could get into another day on, thoughts of why to value this thing like that. But, that's just it. I mean, it's take some action, get into it. You're going to be better off mining than buying the coin, as long as you're in a good deal, as long as you make a good deal. And that's what we do. We've got people who don't understand, and we're able to help get their capital deployed into these good deals. And the other thing too, you mentioned that, like, I wish I would have bought Apple, Amazon. I mean, look at, Jeff Bezos. It's probably the only person that held a stock for the last 20 something years that, it's that thing's been a roller coaster ride. Bitcoin's no different. And that's the other thing, is why, when we get into stuff, we're looking for people, there's opportunities for yield. There's opportunities more from like a venture standpoint, where you need to see the thing through for 8 to 10 years and let it compound. And, maybe it's not that long, maybe it's 4 or 5, but point is that that's also part of it too, is it's not just, hey, double my money and get out. To really get those crazy returns, you're going to have to put up with some volatility, and you're going to have a low time preference to understand that, this is a savings technology, and this is something that I'm going to preserve my future value in.
Yeah, it really seems like now is the golden era of Bitcoin. So that's something really good to remember. So with that, as I'm calling it, the golden era of Bitcoin, meaning everyone knows about it. So is this the best time to jump into mining Bitcoin when everyone knows about it?
The difference is that, let's look at mining as in its history. Okay, when it very first started out, this thing was extremely niche. A few cyberpunks. Then you get through that phase of just, now you've got some hobbyists and people that have some know-how that just start doing this in the garage. And it was a hobby industry for a while. It became you got to look. I mean, this thing, you could mine Bitcoin on a laptop. Now, I saw something the other day that, the original Apple computer in the early 80s, it would take a couple million of those to equal the computing power of one S19 miner right now. And so the computing power, it's the fastest computing power growth in the history of the world is the Bitcoin network. The power, and you got to understand that power, that is its resiliency and its security, to know that it's not going to be messed with. And this has, went to an industry where now, unless you're throwing millions of dollars into this, you're going to have a hard time competing. Even throwing a couple $1 million into Bitcoin mining, you've got a long road ahead. And if you look at now you've just got people that are coming in with massive amounts of capital, which is why, my thesis is that this is going to become essential infrastructure, and it's going to be done by power companies, large energy producers, and it's going to be, probably a game that, gets fought down to the tightest margin, just like, like say refining oil, so to speak, into gasoline. It's a very low margin business, and it'll still have, its ebbs and flows and whatnot, but that's kind of where it's going. And so there is an opportunity right now to invest in these companies, or to become a part of it, or to take, either your capital you have, or maybe your energy asset you have, and joint venture with someone like us, and get involved in it before we see these large energy companies, these power companies, just take it all over. Because it's going to happen. And it's going to happen a lot faster than people think, even than I thought. I had a time frame of 8 to 10 years that, this was going to really, probably be at that point, either if I'm not a power company myself by that point in mass scale, then I'm probably sold out to one. Then again, I'm starting to see some things that I might up that forecast to 4 or 5 years. I mean, it's happening very quick. And I do think the opportunity to move on this is now.
Wow. So now is the time. You heard it here from Nick Campisi. That's all the time we have for this week's episode. Thank you so much, Nick, for this really valuable information. Really.
Hey, man, thanks. Great talking with you.
Yeah, thanks for everyone for tuning in, listening to all this great info about Bitcoin mining. If you have any questions about mining or want to contact Nick, please visit www.liquihash.com. That's liquiihash.com. See you all